on Friday, of course, and we're here to talk about the happenings in the market over the last week and catch up with you all, traders and investors. Welcome to the show. My name's Rocky Outcrop. I have 4 charts open beside me. That's the Bitcoin, the S&P and NASDAQ futures charts, and the NVDA chart at the top. NVDA, of course, being the main topic of last week's show, given they had earnings. Now, we spoke about this and made some predictions, and they panned out. Overall, I think we should analyze how that is the case while we're seeing the prices at around $180, more or less where they were closing at last week. What is there to be taken from this so far? It's an incredibly interesting story. It goes right to the very heart of markets right now. It's got good bits and bad bits to it, and I'm going to be talking about how I think this is going to adjust my trading expectations for the rest of the year in today's show. So hit the like button and do hit the bell to be informed of my videos as I go live in the future. You don't want to miss them. And in today's show as well, we will be talking about Bitcoin and cryptocurrency too. So shout out to all my crypto trading family out there. Welcome to it. Not just traditional stuff here. And on that front, I will be talking a bit about Bitcoin dominance and about another dominance chart that I think is quite revealing and worth being aware of. Something I actually hinted at and meant to talk about on a show a couple of weeks ago and admittedly forgot because we had too much content that week. And there is a poll, a golden poll right now in the live chat box to get involved in. Do you have turkey at Thanksgiving? Is it Turkey Day for you? Are you vegetarian or vegan? Perhaps, I don't know. Let me know in there. Or perhaps you eat something else at Thanksgiving, because I know a lot of people don't like turkey. I have an older brother who doesn't like turkey and will eat beef or something else, chicken, at Christmas time.
It's not me.
It's
the
not
other one.
It's the other one.
It's the weirdo.
And we're going to be talking about LivePerson as well, because I've got a goal in the chat along with that poll. Do take part in the poll. 52% of people do eat turkey at Thanksgiving. They're way out in front at the minute compared to the others. But get your vote in there. You have still time to change things. And we're talking about LivePerson because I have a goal in the chat right now. We're 3 out of 15 towards it. There's been shocking and big things that we should talk about. Maybe the markets have opened up a space for us to be able to talk about them today. So when we've made it through analysing the traditional markets and the crypto ones, looking at Bitcoin dominance and so on, as I said, the big reveals in today's show, we will talk about and reveal the truth behind the insider selling at LivePerson, because people have been shocked, right? People have been scared. There's fear associated with this, fear, and you're looking at certain parts of it like, why was this, why not that, and so on. And we need to look at the truth of this and reveal it. So that's what we have scheduled for today's show. The live chat box there is ready and waiting for you. If you're new here and just joining the community for the first time, get involved in that and meet some friendly folks. And the ones that are in there at the minute, how are you doing your mad selves? Let me know in the chat box. Are you as well? See, we've got great people checking in with us right now as we go. I'm Not Cat and so on. And we also have people supporting the goal. Big shout out to the fan funding people in today's show so far. You Boogie and JP and Only Shares, you guys getting the party started. Big shout out to the members and Patreons. Okay, the show is here with you folks. NVIDIA, last week, what did we say about NVIDIA last week? Said that the earnings would probably result in the markets having a bit of a pump. Laid out the background story up to that point, and we looked at the likely performance of the stock price following the news, but we also tuned in to see kind of a live experiment to look at how stock prices major news affects them at the time, and we saw that in real time together on the show, and that was really a good way to educate people about trading and investing around these major events, but also we spoke about the background story and the background stories and how the effect of this news would go over a couple of days, saying we want to see how it actually pans out over the next week or so. The long-term story that we spoke about is very much true, but there have been a couple of changes to it already. And markets responded in a particular way. We didn't analyze over the last few weeks things like a show where I had explained the relationship that's killing markets right now. And a big part of that was to look at I did it again, crypto fingers getting me to bring up put T on the end of a gold chart ticker. So we spoke about this last week in not last week, in the recent past, and it was on the run up to these highs actually in the gold price, and we were calling for it to have a bit of a correction, and it did so, and that was the first step towards breaking a toxic relationship that exists inside charts. Then we spent the last few weeks talking about how there's a really strong relationship between this chart, the NVDA chart, and the major indices. Here's the S&P 500 futures chart, for example. That was one of the big parts of the story, and of course NASDAQ, NVDA being such a big part of this index, the prices were moving in relationship to it over the last year or two, sure, absolutely. But over the period of a couple of weeks there, every single candle across every single major chart all the way through were following what the NVIDIA ticker was doing in a run into a period where there was an event. And we were talking about this causing a what's known as equilibrium, where you have algo traders and bots, arbitrators, high frequency traders and so on that will amortize any difference across different assets. But also you've got this aspect of everything being concentrated towards a particular stock and a lack of breadth in the market. And it's very top heavy, which created a frothy story in markets and led to an overall AI narrative bubble appearing in the news and every single place that you looked actually for a while, and that really intensified emotions. What we then saw happen was great, because we'd outlined before that we want to see a dislocation in where these flows are going. So when you have all these equilibrium markets working together, pushing money from, say, this stock over into this stock, and as you can see, that looks a little bit different there, then markets become very concentrated. Now this is the Google chart. And one of the major pieces of news that interrupted the NVIDIA success story after decent earnings came from this stock, and not just this stock alone. But the first piece of the story was, of course, the jobs report. That came out the next morning. It was September data, delayed. We kind of knew what to expect, but they beat expectations. They're a bit stronger than expected, and people thought, uh-oh. And it flipped suddenly. This is the NASDAQ chart again. What we had was the expectations for a rate cut dump. We saw the markets also dumped, and we had NVIDIA dumping from 194 down to 180 on the close. It was a bit problematic, right? The people want to see a rate cut for so many reasons, and this information was enough to make markets panic into close on Friday. There was bad news too from the competitor, Google, another company that you wouldn't identify as being a real direct competitor to NVIDIA, because this other company, who's a massive customer of NVIDIA, Meta, decided that what they want to do is to start buying chips from Google instead of NVIDIA. You can see that this stock price here has been very reactive recently, and today, this week so far, it's actually done okay, great. It's up at $638 from lows of 583. That's decent, looking at that move up. But it's obviously been suffering recently in line with the rest of the markets. But we did see a change here as well, and that was part of the news, right? That they're going to buy from Google instead, which of course was music to the ears of Google. So during the day, the prices then rose up, and that then lifted up the stock markets. So we saw this rise up in the stock markets here. As you can see, this last leg up has been positive because of things like Google doing very well. Meta's done well as well. We've had other big companies in the world doing okay this week, but suffering as well. This is just the last couple of days they've done okay, sure, but suffering throughout the week, dragging the markets down, and there's been a bit of a spike up this week. But the story isn't spiking up because of this stock, and as you can see here at the lows of the other day. So this, where it's slightly negative at the lows of the other day when we were talking about it, it closed last week at 180, which was max pain on the stock. What we have here is a story which is actually showing us that the major index of the S&P 500 and the NASDAQ have managed to go up, while this thing hasn't, which is a change of the story from before, which is what we were looking for and had planned for a long time. So we can anticipate Meta changing from who it's going to get as a supplier, but we did know that there was tension here for NVIDIA. So in terms of like carrying this forward and asking the story from NVIDIA from this point forward, and the context we had last week as the background story, how do we reconcile the delta, the difference between where we were there and where we are now? And of course, we know going into last week, things like Microsoft were continuing to buy NVIDIA chips because they had plans to internally produce their own, not buy from Google and not buy from NVIDIA, but make their own. And they've been delayed, so they continue to buy the NVIDIA ones, which inflates the NVIDIA stock price, which creates more bury fear dynamics of circular economies and so on. But Meta joined that bandwagon by shifting its producer over to Google instead of NVIDIA. So then that's a double whammy on that front. That looks kind of negative. And then where do we see the story evolve next when that became reality? Well, you've got the White House and NVIDIA discussing whether or not they can sell the chips to China, the better chips. Perfect timing as the US customers start either buying the very top end NVIDIA chips or try and buy the competitor products. Now, what are these competitor products, you're asking as well? Are they any good? Well, just to wrap that up, in terms of the NVIDIA story, it makes the very best chips. And these other companies want to use other more efficient but not quite as good chips to do where the AI speaks at the end. But the hard work of building the AI is done on the better NVIDIA chips. So their headline products still sell. Their older products, which are causing fears about depreciation costs as the products get deprecated, are mostly born out of the fact that their markets are so limited and they can't sell those same chips to China, which is obviously a secondary market for the companies who bought them originally. So as the fears of the internal market demand collapsing for NVIDIA became apparent to the White House, they then began negotiations to allow them to sell to China. Of course, America meeting up with China in April gives us a sort of forward-looking date to carry any positivity through into the early 2026, which is fantastic timing because this is, of course, the tax sort of time of the year when people sell off their shares to be able to fulfill their tax needs. And we have the natural depression of the markets before we get the nice turnaround, especially with crypto. Shout out to you crypto people if there is a resurgence over the ThanksGiving period right through to key economic dates such as the now anticipated 25% basis point cut of rates around about December the 10th or so, and move into the new year, having put this year behind us and ticked off as being overall quite successful for most companies that had some positivity from this, but quite poor for companies in that middle section and lower, smaller capped businesses where they have had to rely on leverage and gearing because they're so exposed to interest rates. Well, the news of an interest rate cut managed to lift up that middle body, so it wasn't just Google that helped push the stock market up, or Microsoft, because as you will have noticed looking at the charts, when you see MSFT, which is looking way lower than its previous lower highs, and you've got the likes of Meta looking lower than its prior lower highs, but then you look over to NQ and you see that it is, of course, higher than its prior lower highs, and you're thinking, where's the differential coming from? Is it purely out of Google? And there are other areas where this is coming from, where there's a middle band with a little bit more breadth, and some of the advance and decline is spread out a little bit, and it's the starting point of changing a story. Now, if it all reverts back to the story that we had before with the circular markets and the flows, we'll follow that and trade accordingly. But this is us ahead of the game at analysing where things could be changing, and I think that's an important update. It is forward looking as well. With regards to NVIDIA, I do see positivity there kind of coming back to the stock, but the big thing for NVIDIA, a bit of technical analysis here, on the chart, if I bring up something like the daily so that you can see a little bit more info on your screen at the same time, and point out, of course, that there was this high which created structure, which is then being tested with the subsequent drop in price after the earnings came out. So we had a high, which is this big red candle, actually dumped back down that day because it was a gap up that closed lower than it was even the previous day. We then can look and see that there is this area below, this area here, which was tested into and did leave what could be kind of considered a kind of star type candle, where you had a low which was a whole candle which was, you know, positioned below the price action. You can see this big block of price action, big range, and you've got this one candle sticking out here from that bad day as the kind of, I'm not going to be your customer, oh don't worry, there's the White House will let you sell to China, back up here. And if the structure of this does break, then of course you are looking to test down past the, you know, this range, prior range, and you'd be testing lowers. And we've got the rock outcrop flash telling us that you could see prices go down in the future, right? Cool, okay, sound, right? That exists there. But while the structure is above this area, it's very just a, you know, bit technical analysis for people, keep it nice and simple. This is really actually quite positive. What this is known as, by the way, is forming a base. And if you form a base, you protect that, you then give confidence back to markets by testing below it, seeing if the liquidity is there and the demand is there. It proves that it is, rises above it. It breeds confidence about structural areas and markets, and that's called forming a base. But we don't need to get too technical. I've told you the story of markets, and I've given you a kind of feeling towards looking forwards, and this is why then we're moving on to the next two sections of the show. We're doing okay with regards to the fan funding element of the show, about whether or not, you know, I give my full reveal, or the full reveal the truth of the insider sales on LivePerson. We've got some people taking part in that. That's good. 6 out of 15, doing good. Cheers to people taking part. Not there yet though. And don't forget, folks, because time runs out and we don't get there, you don't get the full truth. And are you ready for the truth? Well, we'll see. We'll see. We'll see. Scary stuff, by the way. Really big deal in a stock. What that is, if you're not familiar, by the way, is we're looking at this low cap, small stock. It's kind of like a penny stock. And what we're looking to see happen is a transformation story. But what you have are executives on the board selling shares that are marked as discretionary sales. And you know that there's websites and things out there which look at boards and say, is there insider selling happening right now? And then they go, look at this company, this executive sold off this proportion of the shares that he owns. Oh my God, he sold half of the shares that he owns. Like half, and he's the board guy. What? That's so bad. And let's look and see. Oh my God, it was the discretionary sale. So that's where that fear comes from, and it's a story that you could apply to a lot of things, including cryptocurrencies, which effectively are all like micro cap businesses, the way that they work. I was looking at a cryptocurrency the other day, a fairly well-known altcoin, and thought, how do they do on Twitter? And I checked it out, and I saw that they had around about 200,000 followers. You know, well enough known, I mean, not massively known, not a massive presence on social media. It's a cryptocurrency. And I thought, what is that like in terms of numbers of followers anyway? I'll keep that in the back of my head and see if I come across anything else later. So I happened to be looking at a CSS for designing websites, code packaging software plugin for a different thing on what's known as a framework for making websites and apps and things, which people think isn't very popular anymore. So a niche product within a niche thing. And I thought, wonder what they say on Twitter when I saw it on their website. With that question in the back of my head, wonder what these guys say on Twitter, how many followers they have for creating this CSS package. Boom, 250,000. And I thought, whoa, that puts that into perspective. You know, you've got 250,000 HTML, CSS developers using this niche thing somewhere that are following them on Twitter, and you've got these other guys that are trying to make people money and stuff, big business, and they've got less than that. So that's not that. We need to see better social rankings. Interesting how you can look at markets and learn from all sorts of heuristics. And with that little story out of the way, let's talk about cryptocurrency, because cryptocurrency's played a big part in this. And I think the way to introduce this is to go back to my 4-chart layout and talk about how NVDA here at the top, right? You know, we've covered the story in detail at this point, and we know the technical analysis on it too, and have identified it and called it a name, explained what a base is and everything. We also talked about how this high here in NASDAQ took out the prior lower high of the downtrend. Significant. It's a structural break. Was that all down? when this chart is followed 15-minute candle to 15-minute candle before NVIDIA, well, it's at lows where it was before. It's not doing that. It's not doing that. That's definitely not happened. It would have to be up much higher. So what about, was it just like one company, Google or something like that? Well, not really. Not when you look at like the Magnificent Seven. It wasn't just them. It was more than just them. Indicates a bit of breadth, a bit of positivity coming from expectations of an interest rate cut coming, so on. But we're technical analysis. We like to know the macro picture and the backdrop. We've discussed that in detail, but we can see from the technical picture here on these two that they broke past their prior lower high. But what's obviously jumping out to the astute technical analyst out there is the S&P 500, which has got less tech stocks in it than NASDAQ, is less weighted. I seeded this idea a bit foreshadowing earlier on in my chat when I said how NVIDIA is so heavily weighted in NASDAQ. Well, look at the S&P 500 where it's slightly less, and you can see that this is beating its prior lower high by more. So we can use technical analysis right here to show that there's a bit of breadth in coming in because of this dynamic, which is pretty cool, right? Especially when we're looking for the decorrelation of these charts to this one, so pixel perfect that it had been up to now. So that's really cool, and I've done it in a pretty cool way. I'm a cool guy, that's, outcrop, rocky outcrop, shaken, not stirred, hit the like button, etc. But then what we have here is the Bitcoin chart, and Bitcoin was slightly different. I keyed this up, talked about it a bit more, and we can see it here most easily on the chart if I just kind of highlight with all these other ones on here, this low at down where we tested a bit lower, actually had kind of this flatness here on the indexes during that period of in between times on the markets and it was 8 a.m. by the way, so the futures were open as well. It wasn't just like because the other ones were closed. So during this period of time, it was what was that extra dip about? And it was kind of the start of thinking, hey, this is us needing to reach a bit further, finish off something that had been left on the charts for some time, get a bit of resolution to an equilibrium from previous massive liquidity flows in the past. Okay, whoa, you lost me, Rocky, you went super technical again. I've got an indicator which shows us in the past that there was times when big money was left waiting to be resolved at some point in the future. And rather than breaking down all the technical reasons why that may or may not be the case, the suffices to say that when you see something like a big retrace coming back down to one of these flash points, as we like to call them, the flashes, then you know that something is kind of being resolved in a big money thing. And it's a draw on liquidity, and it created a liquidation event, of course, which wiped some people out, and we saw fast price action bringing the movement back up here. That's what's happened recently on this chart. This is the daily cryptocurrency Bitcoin chart here, looking at this move that happened recently and saying that the indexes didn't do it of the traditional market, and that this was because it had structural reasons to reach a bit further. And when it did, it created a liquidity cascade due to liquidations, which had been placed at a point where they thought they had the liquidity there to protect them, but they didn't, because they don't analyze charts the same way as we do. And there was this, and it wiped them out and pushed back up, and that's what happened. Okay, so we understand that there was kind of a structural reason behind this, but it also led into more kind of decoupling stuff happening, really, and it's an interesting necessary start to what could be a change of a story. And we've seen then since that like structurally the markets have respected and responded to areas that I've identified on the charts as being the places where that would happen, and I'm starting to see what potentially is a move away from just being directly correlated to NVIDIA. If I just take this as the example using a 15-minute chart and kind of thinking about how that looks, and then jump back over and test my assumptions, it looks a bit different to the way that NVIDIA looked overall there. And incidentally, by the way, one of the things about NVIDIA is it had a inverted head and shoulders on it, which not everybody would have noticed at the time necessarily, but was one of these kind of more textbook clear ones. So just before moving away from this entirely, I'll just draw this on here for education purposes. There it is. So just here was your left shoulder down there to your head, up to your right shoulder here, and then there was the neckline, and that played out. And that's what a successful, clean, like that's a clean looking Head and Shoulders in today's world. And I know that's not what you might expect from a textbook, but just because that is the major stock in the world right now, the most attention on it, a technical pattern, and it's a great example of how this is the type of mess that you're expecting in a market in 2025 on a chart pattern, and that's as clean as you're going to get. And also it's played out so far quite well using the way that you would typically do this type of thing, so just kind of sticking that there. It's played out so far quite well, but in order to get there, obviously this needs to be its own structure, and that's the story going into next week. Just traditional markets on this big kind of backstop on a massive chunk of liquidity in the market. And the question as well with regard to, because I did mention open interest, was that during the period of uncertainty running into it, it was pinned towards its open interest target of with a max pain. That's and a lack of all other information. That's quite often what happens with markets, and that's why it closed at 180. 180 remains one of those areas. It's the current max pain for this week, I think, or at least it was the other day. We need to update that. Yada yada. That's a story about looking to see if we can start pushing past those targets towards the top side until things change. The following sort of broader term look is that because of recent bearishness stacking up short side interest on this one, there was, if you wanted to say just purely planning on that alone, that there would be a dip further and then a rise up back towards 200 or 220 come March next year. But who's looking at forward options chains, because that's like, I mean, right? So we've done the analysis on that, and the Bitcoin one we've kind of summed up pretty well and said, hey, moving on. If this overall though, this piece here does turn out to be a nice bull flag, it's quite cool because as you can see, the move up to start beating the structure here from our prior lower highs is also some way off, left a little bit lower than it was on the others. So there's a bigger beta on this, right? Alpha is when it follows something else, okay? Beta is how much more it reacts to the alpha that it's following. So this has an alpha to the traditional markets. Currently, it pushed down a bit more to structurally satisfy an old liquidity area that needed to happen. It's rebounded slightly, but it's not taken out its prior bearish structure. If it does so, then because of the higher beta on this, it would react further and faster than the stock markets have done, and that's a great setup looking into where the future is. But the other reason about why this came a bit lower has to do with the altcoin story, because the altcoins have not been pegged to the value of Bitcoin as much as they have been in the past recently. One of the reasons for this is because this year we've had inflows into Bitcoin from ETFs, which have inflated the price, and then Ethereum and so on did too. Solana, XRP, these are the names that had inflated prices due to institutional flows. And those flows didn't correlate with the dissemination of that capital throughout the rest of the cryptocurrency market that they would have done in the past when things like DeFi were driving the story, because that is a draw on capital towards a different area of a lower base which has multiples on the value. So that lack of liquidity flowing in disconnected the bullish rise in Bitcoin to what's actually been a bearish trend in altcoins over the last 4 years. But it's a hidden bearish trend, and this is what's killing altcoin investors and is making the market for cryptocurrencies seem kind of meh, and nobody's getting involved. So that's the story, right? That's the story. If you're a cryptocurrency investor, you've got something else to say about it, I'd love to hear it, but that's what's happened. So what have we been looking to see happen? And the story has evolved through talking about the differential in values and how the tail's wagging the dog. And of course, we needed to see for Bitcoin to break the 123 grand high, altcoins push up. They didn't, and in fact, liquidity sucked out of them towards the end of the year because of the altcoin bubble, or the AI bubble fear, and the beta all the way down the chain, because the beta on altcoins, which is linked to the alpha of crypto, of Bitcoin, which itself has a high beta on stocks, which itself have a high beta on, and that whole thing together is what created this massive dislocation in the tail end, which was affected by beta to the downside far more than any beta to the upside, never recovering and always losing out. And this is because of the lack of flows towards those projects, which continues to create a bearish overall market in the altcoin space. So how do we resolve this under these tensions that we have right now? And one of the best ways to look through the noise of this is to go to the Bitcoin dominance chart and to ask a question about, will we see resolution here, and has the dump in Bitcoin so far managed to ameliorate or amortize or close or get rid of some of that difference between the higher value in Bitcoin and the lower value in the altcoins as a result of this recent volatility in markets? Has it balanced something out in the background? That's the question to ask right now, isn't it? I mean, when I've laid it out, it seems quite obvious, but that's why seasoned investors think like that. This is what is of course, the hidden alpha in markets for investors, why you made the right decision to tune into today's show. But this is what's going to obviously pass most people by. There's a big threat down below, of course, on Bitcoin dominance, that from this flash target, it comes down here to 58 again. It has risen up recently with the resurgence in Bitcoin. But if we look back over the course, this is the 15-minute time frame back to early November, we can see the bleed off that's happened in Bitcoin dominance, massively closing the gap between it and other alts. But, and here's one of the big value adds of today's show that I said I'd do, is I would mention the other thing to cut through the noise, and is of course massively overlooked, right? It's the USDT dominance chart, and you'll see some really interesting things on this chart here. This is the 15-minute chart as well. Huge rise up, the bearishness throughout November. Go back here so you can see the rise in the Bitcoin and the USDT dominance chart going back to like a low in this trend. Every time this goes up, your altcoins and Bitcoin is going down in value, essentially. You can see that it rounded out here back in October and then started running towards the top side. That's because there were some highs in October, which were then faded off. We get up here towards Friday, 21st November, and we see this downward trend happening in the USDT coin. Looking at the back, yeah, we've broken a bit of structure. That's pretty good. It isn't a massive cascade and sell-off yet in terms of a buy-in to altcoins. Not yet. It's not happened. It's not exploded down. And down on this would be up on your alts. Down on this, up on alts. So, but that's certainly very threatening at those highs for a change in the structure. Go up to a bigger time frame so you can see this in more context. Right? Go up to bigger time frame so you see it in more context. Yes, this recent rise up from the overall going back to August, and you'll remember, like, that's, going back to August, that was when the last time it was in any way good for cryptos, has risen up to put in what is an all-time, is it all-time high? I think it is. No, it's not all-time high, but it's not all-time high. It's not an all-time high, but it's a massive high, right? Sorry, but it puts us into this structure here, this massive structure here, which you can draw a box around so easily from where it started to where it is now. Oops, and you can say that, yeah, this could indicate that crypto could be about to crash way more, and we're aware of that. I think I need to be clear. I'm presenting a bullish case in the face of the natural opposition of the bearish trend that exists on the charts right now. The basic point of it's bearish until it isn't is what we're examining here by looking at the key pivots. Of course, this would breaking up the way would mean it still is bearish. But if it was to do what it's done and it would cast their eye back over the last couple of years inside this range, then this would represent a high overall. So far this week it's come back down a bit, and breaks of certain key areas here, see it cascade down, and you can see it drop down to 4.26% from where it is now at about 6%. So that's a huge drop, relatively losing like a third of its value within that chunk of that move there. Despite the fact, of course, it's got this huge chart here of history, and we know that the first amazing rise up was, of course, the dissemination of USDT going back to 2016 and and you see more and more trading pairs trading against a stable coin, etc. The original sort of stable coin and all that got up towards highs here in 2022, which is partly because, of course, the flows began then in towards Bitcoin, and then we've been trapped in this range then ever since, with the ETFs kind of capturing the major top end of the flows and the lower end of the altcoins supporting this up. So it's time for this to change, and even just to move back down to these lows represents highs like you've not seen since December 2024, right? That was the last time it was at a low. You go back to the other low, March 2024, two great periods of time for cryptocurrency. So this here, the bad times, now November 2025, look back April 2025, August 2024, and November 2023. You might remember some of those dates of being pivot times, and so you can see this is important. And that's, I think, interesting. So the altcoin, pardon? Deep insight into the flows, the current way that markets are working. So when we go back over to look at something like, just to dive back into the soothing waters of cryptocurrency again and look at what's an astoundingly messy chart to the new viewer. Hello, new viewers. My charts aren't as messy as this all the time, but if I zoom in, you can see this is an education about support and resistance. Cool, okay, some old chat. And the
soothing waters of crypto.
Yeah.
But is it not more like a comfort raccoon?
A comfort cocoon. Raccoon. A comfort raccoon of crypto, yeah. Well, here we are in the comfort raccoon of crypto. And looking at this, so you can see the resistance there is in the past, and support and resistance, whatever, old lessons. There's probably some chat about channels. So, but the story here being that you're at a high overall range, but towards the low side of it in this coin. So you saw the USDT picture. Thanks for teasing me. Saw the USDT picture, and I drew a box around the range and said you're at highs and lows. Do the same thing here on like a major altcoin, and draw the big box around it. What do you see there is that prices are roughly towards the lower end of this box, so a rise up here and so on. So you can see the relationship there, but it's great to see that the pain of the movements of price, which have extended out to key areas like huge drop in altcoins, big drop down in crypto is done, and Bitcoin has done two things recently. The drop down in Bitcoin has actually reduced the differential in value between the two major things. The basket of institutionally approved coins, we're getting all the flows, and the ones which are all the rest of the cryptos, all of them, your avalanches, your 1 inches, your polka dots, your whatever, have all been losing out on that flow of that money, and that has then amortized slightly in the drop in value, as we saw displayed in the Bitcoin dominance chart. And in terms of the overall flows into crypto, we've also seen that the money's been moving towards one of the stable coin dollar representations, a safe harbor against risk off, up towards highs, and it got to a very, very big high, which correlates with past dates. Structurally, it could push through it, but so far this week it's dropped down. A movement down there takes off like a third of the value of USDT, which would be a good way of that money would be flowing into other alts. So you sell your USDT to buy an altcoin, and then of course then that would draw that down to that chunk, and was like, well, what would that look like on a crypto chart? How do we see that correlation? You see it here on this one, and what looks like it could be a major top that gets, if that drops down and this breaks and it drops down, it goes down to $20, and everyone's like, oh my god, crypto's lost all its value. Solana was $250, now it's $20. Oh my god, this is terrible. That all is the bear scenario, right? But trapped within this range during a period of uncertainty, when markets were following one single stock throughout them all, and we're looking for a change in that story. We also want to see it happen whenever the structure on things like USDT dominance is at highs within its range, where it has the most likelihood to turn around, and it explains the extra stretch on the pain of the cryptocurrencies over the last few weeks during that period of uncertainty, when at least what you're looking for before you see actual new money in is the money within the system to begin flowing in your direction. And that's what we're looking to see happening, because I've talked about flows a lot. That's deep insights. You might need to watch all of that twice to kind of actually pick it up, what I'm putting down there, but that's my cutting edge, bleeding edge view on the markets. I've done them all now. Done them all. That's the first two major thirds of today's show done. We've got to talk about the markets last week, what happened, catch up, all the backdrop, where we're going next. The everything you mentioned about AI bubble and talked about interest rates and so on there and everything. Today's major news is, of course, from my perspective, is that the UK budget's just been announced. I haven't even had any time in today's show, so much info to talk about that. There's interesting stuff happening. They're putting up the minimum wage, right, which is cool. Americans will love seeing that in about a year's time when they look at the increase in productivity in the UK, because of course productivity is gross domestic product, and gross domestic product is all the summation of everything everybody earns. So if you put a minimum wage up a bit, it means everybody earns a bit more, which means your productivity in your company, in your country, has gone up. It's great. You might think that I'm taking the PP out of myself here exclusively, but the reason I said Americans might recognize it is because that your amazing Starbucks service economy, where you hand over cups of coffee to people, is really super productive, and it's got nothing to do with getting people in Chinese slave factories to actually make the phones and stuff. So productivity and the great productivity crisis in the UK is disparaged by the amazingly productive American economy. Interesting stuff, right? It's interesting stuff. That's why I could go into a whole kind of satirical vibe about that. Nothing against the American economy, by the way. I'm doing a show about that. I clearly like that the most. By the way, the other thing that I could talk about, which hasn't been mentioned, is how the interest rates in Europe are nearly 2%. How the inflation in Europe has been 2% for a long time, and I could talk about the impact of shelter on the inflation data in the US right now, and the impact that changing that could have with changing the interest rates that people are paying on their mortgages could have, and whether or not that is the Fed's remit. These are things that we could talk about, but we don't have time to talk about because we have made it to our goal. And we're going to talk about LivePerson for a bit here, folks, because it's a small cap company with a big cap story, a big cap story. But it's, of course, a tiny wee company. It's only got like 10 million shares. So as you can see, if the price over there thing's about a $5, this is a company that's worth about $50 million in total. So we've really gone down into a specific niche here. What niche is that? Well, this is customer service using AI. And AI to do customer service seems like, let's face it, one of the few actual productive business use cases for like an AI end product. There's obviously the whole like write my marketing speak for me thing or whatever. I bet every single one of you has been inundated with AI script videos. I often think watching YouTube these days, okay, I'll let this person tell me what ChatGPT would have told me had I asked it directly, you know? And it's like sometimes they do an okay job at it too, but like you can see it's already changed the world. But what's the most kind of like I'll charge you per message type message business that you can get from it? And customer service as a business for an AI naturally makes sense to most people as being like, yeah, cool, that's an easy use case. Like it's not like Instagram. It's not like going to culturally change the way that 16-year-olds interact with the world, but it's definitely going to make some money, right? And that's what we're all about here. So it's kind of an interesting business.
It's not about vibes.
Yeah, it's not about vibes. It's about actual, making money as a business, and can you apply AI to it? And so while AI might be great at generating you 17 different versions of yourself in an album cover photo, it doesn't necessarily make money unless you apply it to business. And that's why we talk about this one, because what we like to say then is that this is the cheapest house on the best street. It's kind of like a phrase from real estate, where if you kind of value a street because it's got lots of nice houses on it, and there's this house at the end that could do with a lick of paint, and you're like, well, that house sold for $1 million, that sold for $1 million, that sold for $1 million, this one's selling for $500,000, it just needs a lick of paint. It's the worst house on the best street. You put that on there, it sells for $1 million too. It's basic business sense. Now, does it apply to this stock? Well, it kind of does, but you look at that and you say, well, if this is a great stock that's going to go up in value, how come, and this is what's got a lot of people scared recently, how come the worst thing that could happen is that somebody who runs the company itself decides to sell a whole chunk of their shares? And as I said earlier on, there are websites that are dedicated to just telling you about this particular aspect of investing alone, and will dedicate their whole site to telling you how good or bad this type of thing is. And typically it's bad, and it's good if an executive buys the shares, and it's terrible if they sell the shares. And in LivePerson, we've got the CEO, who's the chief executive officer, and he's come in to do a job to transform the business. And it's like he comes in and he knows, the business is to be transformed. It's a whole transformation job. It's a business which has had a negative trajectory, and then he sells shares, and you think, well, the guy that's got his hands on the steering wheel for this thing getting out of the skid that it's in is decided to chuck the baby out with the bathwater. It's the natural reaction that you get when you see something like this, and it makes you think, well, if he's selling his shares and he's the one that is the best about the company, who's actually literally carved in wood onto the figure front of the ship as we carve through these oceans, he is decided to sell, so why wouldn't I? And that creates a bearish reaction amongst people. The quick solve to this usually then is like, well, hey, was it just like some pre-planned sale? Is it just a sale from, like he said, hey, say 3 months ago, say he decided to sell some shares at some point in the future because he had some bill coming up or something like that. And he's like, well, I'm going to sell some shares, but I don't want anybody thinking the wrong thing. So I'm going to fill out this form to make sure that they don't think the wrong thing. Because if you don't, then they'll think you're just selling them at your discretion. And it'll be marked with an S on the SEC filing that you get. And it's like, that's bad. That's like the scarlet S that you wear. Then everybody knows that you've been up to no good. And that you don't believe in the company. So people get so scared, right? Isn't that the case? I'm sure some people out there felt like that recently. So they've checked to see what happened. Did John Sabino, the CEO, and John Collins, bless you, who both sold shares, lots of shares recently, did they use that form? And shock horror, it turns out they didn't use the form. So they're like, oh my God, how terrible is that, right? It's even worse, isn't it? Because they didn't use the form. We knew in advance that there's different types of sales that people can make. And either they do it this way or they do it that way. And they did it that way. And that's the bad one with the bad S on it. And it causes people grief. And then you think in a period of market turmoil that when everything's getting sold off, that this is the last thing that you need. That's what you think. And
you piss your breeches.
You piss your breeches. I go and piss my breeches, Charlie Utter. That's what you say, isn't it? Okay, so let's think about this for a second, right? Let's think about this for a few minutes, just a minute or two. Right? We know the surface level there. That's the way that the market saw that initially. Like, oh, here's this thing. It wasn't marked in this way. That means this thing. He's this person. He has this insider information. So therefore, and we extrapolate out, and that's the bad story we come to. And as I said, it's such a commonly done thing in investments that there's whole websites and applications and companies dedicated to this singular aspect of looking at investments. An algo bot could be monitoring these websites and then automatically selling as well, along with that executive. The timings would be maybe a bit wrong, maybe a bit right, but they'd be on the side of the executive, right? If they're bearish, I'm bearish. Yeah, makes sense, doesn't it? Well, let's interrupt that negative story there and call it bullshit. Let's inject some reality into that story. And I think it was hopefully had some catharsis in there for you if you felt like any of the personas that I've described throughout describing the negative case. And if you have, or maybe I've caught your attention and you're thinking, well, what could he possibly say? Because that's exactly how I feel, because it's a big smelly pile of pissed up britches. Okay. Well, I have actually got some good answers to that. That form that you're talking about, that you should fill out, it's called the 10B5-1 form. It's a very commonly used form by executives where it allows you to sell shares in these windows pre-planned, and everybody in the markets knows that you're transparent, because executives are just people with jobs. They're human beings like you and me. And there's a couple of different ways of going about being a chief executive or a chief financial officer or anybody else on the board. If you own shares and you're going to be selling them and so on, there's a couple of different ways of doing it. And what you want to see is transparency, and what you want to see is them working within the kind of bounds that you, the investor, are working in. So if they've published financial statements, then if they sold them right after the publish of the financial statements, you think, yeah, the knowledge is all public, is most up to date that they have, and they've published it. You're on a level playing field. On the other hand, they sell them just before the financial statements. You think, oh, they knew this was coming up and they sold them anyway. That's so bad. They did that anyway because they knew. And then to legislate for this, the government has then put in little windows where you can and you can't sell. So the earliest you can sell is a couple of days after the financial statement, and after the financial statement. Then the earliest you can sell before the financial statement, or the latest you can sell within that window, is like 10 days, so 2 weeks of business days of trading. Has to then go by after your sell, before the material information is made public, and then of course doing it that way is even sketchier, because you could just delay your financial reports, or you could have done it in some way that you had some information. But doing it the other way is much more transparent and accountable. So there's different types of CEOs. Like, one would do it one way, kind of profiting just for themselves, and the other one would do it the other way, where they're thinking, I'll make, to some extent, like a sacrifice for the people who are in this with me by doing it in a transparent way. I could have made more money because I did have material information and insight and everything, but I did it in this window which is set up for me to be able to sell these things in the cleanest possible way, one or the other. And we can look at examples of CEOs that we know, right? So we have, for example, Ryan Cohen, right? Most famous CEO of the last 3 years who isn't a Mag 7 or invented something or achieved something in business. He's the most famous CEO, just generally speaking. If you had to ask 100 American people walking along Wall Street today, tell me a CEO who's like not Mag 7, isn't just invented some amazing product like, OpenAI or whatever. Who are they that's become famous in the last few years? Boom, they'd say, oh, Ryan Cohen, this guy in GameStop, big meme stock thing happened, super famous. Millions of investors around the world really, really trust the guy, see him as being on their side. And then you look at like how he's behaved at times comes to things like, and I'm not doing a character assassination at all here when I mention to people.
You don't have to.
That,
you're speaking to the foundational base of the GameStop movement.
Yeah, I'm speaking to. So the people who are watching here, they know, and they're foundational base of that movement, who's tuned in my part of my audience as well. They understand. There's good eye to eye with us here, speaking on a level. This guy, like, who sold the shares for Bed Bath & Beyond, for example, he put out information into the media that made it seem like he was buying shares. And on the day that was published, which was just worked out as being when he was able to do it, he sold the shares. So the market bought the shares into his selling. And it was done in a way that afterwards, when you look back, it split people, because half of people said, who do you want running a company? Like, somebody who's like so savvy and in tune with the markets and understands the markets so well that he can beat them so well, and he's in charge of our company, safeguarding our money. I support this guy. He can be as ruthless as he wants. And then you had the other people out there who said, I don't really like the way that went down. But either way, it was done that way for that CEO, that style. And then you've got the other type, which does it like pre-planned, blah, blah, all clear in that. So people then naturally look at Sabino and they think, which one was it? And they see that it didn't have that marked on it. That 10B5-1 form wasn't used. And they naturally assume that at best, he's ruthless like Ryan Cohen, and at worst, he's one of the baddies, one of the Lehman brothers, right? Bad, malicious, stuff like that. And they think it's from that camp. And the story typically stops there. And it's frustrating, right? Because these are people who otherwise have got the capacity for much greater intellectual reasoning than that. But like the Gen Z OpenAI user who thinks that Christopher Columbus crossing the ocean in 1441 as a hallucinated answer is good enough to hand into their teacher, this audience seems to be to that information who responded badly. Not this audience who's much savvier, seems to react in a way that precludes any further investigation or connecting logic. And the way that funny kind of erudite people in Scots land here, what the country what I live in, say is to engage your brain. They fail to engage their brain. It's a pretty good kind of harsh sounding, polite, but it's not way of saying they're being stupid, right? Because look at this series of information. That form is for when it protects you against material information that if you know about that you're unable to sell. It's exclusively able to be used whenever you know that there's non-material events happening. If we look back at when the last time that form was used by him, it was during a sale of shares that he was awarded that had vested in September. But he wasn't able to sell any more shares in September because of two reasons, right? The first one being that there was material stuff happening at the time. How is he able to use the form when there was material stuff happening with that share sale? Well, because whenever you're being given shares by somebody else who then, on your behalf, then sells some because they're giving you the shares, but it's an agreement in advance that you'll not be paying the tax on them, so a proportion will be sold in advance. as set up by the most advanced economy in the world, the United States, which has been developing financial mechanisms and systems for hundreds of years and is the pinnacle of human financial engineering and legality, and it fights this stuff as much as it possibly can to prevent any sense of lack of transparency, to open up avenues for transparency, has figured out a system for this already, amazingly.
Tied it back
And
to
they've-
their fundamental rights as a citizen.
Yeah, tied it back to fundamental rights of the citizen. They've figured all of this out already, right? They figured it all out already, and you can look at it. So he was able to sell those shares because that's set up as a mechanism allowed for that process, and nobody thinks there's anything nefarious about it, and it's fine. You can use that form no matter what when it's already scheduled like that, like vesting of shares. Then when you get those shares, right, and you want to sell them yourself, you then use the 10b5-1 form. If you're in possession of no material knowledge about changes affecting the company, then you can do it. Otherwise, you cannot, right? And we all know, everybody, the whole market knows that LivePerson was going through massive debt restructuring, talking about it openly, explicitly. In the Q1, Q2, and Q3 calls this year, we've been very, very explicit about it. And the Q4 2024 call, when the process and negotiations were ongoing. And they were very transparent about these material changes along the way. And the costs and everything have been, hammered and talked about and looked at all the minutiae and fine detail in so much to the extent by the whole market. But nobody has connected the dot that while this restructuring is happening, you're unable to use the 10b5-1 form. It's the law, it's the rules, right? It protects everybody. So what was the second reason he might sell those shares then? He wasn't able to in September. Why would he do it? Well, because if he wanted to be really, really transparent, right? Instead of selling at any time throughout the year, like the celebrators of Ryan Cohen, who will at any time in the year could sell or buy some shares, and he's not being transparent about it. He's just making money. He's an investor. He just makes money, right? He's making money. He's accruing personal wealth. All power to him. The American dream, right? There's that other guy, and then there's a whole host of CEOs. For instance, the CEO of Palantir, who will sell shares in November because they want to be able to pay all of their income tax with some share sales. And they do it in November. They don't do it in other months of the year because then you might be trying to profit from the stock price. But if you always did it at a certain time of year, then it wouldn't be unusual. In fact, as well, if that CEO went on to another job and was then selling those shares in November, they'd look back and they'd say, oh yeah, that's your track record, that's how you go, you're a transparent guy, you operate in this way, that's transparently. So that's another reason why you might not have sold them then just when you were given them. Of course, on top of all the other reasons, like an investor who just gets given shares, and the moment that they get given shares as part of their job, they sell them that day. It's like, how committed are you to the job? How committed are you? This is your salary, here you are, you're going to get given awarded some shares, sell them all. What? So there's numerous reasons why he chooses to act in a way that sacrifices personal gain for a group of people out there, the shareholders and everybody, the stakeholders in the business. He sacrifices that for them. And then he also sacrifices the kind of the human dignity of being able to say to those same people, get off my back, when he's done it the right way. And he is not able to use the form to say the 105B form to kind of bypass a lot of this. And then the amount that he sold, they look at it and say, that was a lot of your holdings that you sold. And he's like, oh my goodness, there were a lot of my vested shares, the ones that I was able to sell, and I've chosen not to sell loads of the ones. I've still got loads. I only sold up to an amount. And then again, people fail to engage their brain, fail to engage it. It's like, had anybody added up what his wages were, his salary, and how much he's paying in tax on that salary, and if the amount of shares that he sold adds up to the amount of tax that he's paying on that year, and if he's just doing the same thing that like the Palantir executive would do? No, they didn't. But is that the answer? Well, I mean, yeah, he sold the same amount of shares as what he's more or less what he's paying in tax this year. The tax rate in America ain't nothing. Like the federal rate's like 37%. He has to pay an extra 3% tax on that. So call it 40%. Say he makes $1 million. He has to give the government $400,000. He wants to walk around from day to day thinking, I'm a guy that makes $1 million. But he's like, oh gosh, I have to pay $400,000. And the company says to him, we want to reward you like an executive that gets paid all this extra money, but we can't give you extra cash because we're a distressed business. But we'll give you shares. These shares you can sell, and when you sell those shares, and use that money to pay off your tax, or indeed you pay your tax out of your own bank account and sell these shares and put that into your bank account. Money's liquid, it makes no difference, it's the same exact thing. So if he does any of these same exact things, then he's rewarded in a way that doesn't affect the company's balance sheet. Again, another sacrifice, where instead of just being given cash as the guy who runs the company, who could now just be like, hey, tell you what, I'm going to just increase the amount of cash that I'm getting and decrease this stuff here, and I'll just take it from the cash flow. He doesn't. He makes these things again and again, and he isn't obliged to explain why he's doing them. But we, as thinking people, capable human beings who've got so much power inside ourselves, are obliged to use our abilities to the greatest extent that we can, because we've got God-given talents, and one of them is to ask simple questions like, is this guy doing anything nefarious at all? And to answer them quite simply and say, well, he was legally unable to avoid this. He sold them at a time when he would sell them anyway, and he sold them up to the amount of the income tax that he'd be paying for that year. Is he invested in the company? Yeah, because he's going to get paid more and more shares. Did he sell all of his shares? Now, this is the key red flag. No, he didn't sell all of his shares. Selling all your shares is quite a bearish thing to do. Selling a proportion is not necessarily bearish, especially if that can be pinned to some other proportion of equal outgoings that you've got. Then it's at worst neutral. And then finally, somebody will come along and say, well, hey, you could always have sold them later for more money if he believes in the company that much. Clamped, got you. And it's like, well, that's a compelling argument for the person who is not capable of thinking. For me and my audience here watching this with me who know this anyway, and shout out to everybody who's super great in the audience there and knows all this stuff, but you know that there's more to it than that. There's more to it than that. And it's already been set up in this amazing country that you're blessed to live in. It's called capital gains tax law, okay? And when you sell something which is appreciated or depreciated in capital value, then you either have to pay tax on it, or because the American government, in its wisdom of hundreds of years of trying to create better conditions for capitalist economics for the benefit of all, has decided to make it so that when you have capital losses, that they can be brought forward indefinitely to be offset against future gains. So while that might sound like a complicated sentence, to put it in simple terms, every single dollar in a loss that he sells a share at now means he gets $1 off the tax he pays in future profits, which means that while you as the investor look at it in a binary black and white event to say he sold, therefore he cannot ever make money from those shares in the future, you fail to completely understand the way that his salary and tax law and the economy is set up in order to continue to incentivize the high performance, high productivity, and I was taking the PP earlier on, but the most productive high performance economy in the world is the American one. And it isn't just handing over cups of Starbucks coffee. And the reason why it's so great is because they've worked these things out. So he sold, and unlike the seller out there in the world who just thinks of that as a loss they've written off, instead, every dollar more that the value of the shares that he's given now, every value that accrues, every dollar is directly offset against the loss he had before, which means that the shares he sold in the past, he will make money on in the future when he sells shares at a profit. It's not rocket science, very easy to understand. Pardon? So he front loads, and he takes this sacrifice now at this loss, because nobody knows for 100% guarantee what's going to happen and so on and so forth. But he takes this risk and he front loads it by selling the shares, which means the only way that he gets money back on this is if he then has shares which accrue in value. So that risk is a realized loss for him that he has a direct one-to-one opportunity to fix, and it's done by making the company he's working for better, who are going to give him shares at lower prices, which will then accrue in value, and he would normally have a tax to offset if he sold them without having already incurred a loss in the past. But it puts him slightly at risk instead of us in that way that every other decision he's made seems to actually be transparent and neutral and balanced. And here is the kicker. I'm throwing that in, right? Because AI loves to say that. Not a single AI has not been near this chat, by the way. Not even an ounce of it. Apart from, and I'm a fan of AI. I'm invested heavily in AI. I'm not using it to talk about this. But anyway, here's the kicker, as ChatGPT loves to say. Let's think about this from the other way around, right? Just to really challenge the bias of somebody who's negative about this. Let's challenge that bias. Let's talk about it from a perspective of a CEO who is actually selling shares and profit. Let's think about this for a second, right? Just a split second. Let's think. No, not even that, right? Let's challenge their bias even more. Go right to the heart of it. This is a CEO who's buying shares, right? How bullish is it if a CEO who you know has been given shares in the past and the value has gone up, this company's, the CEO of a company is doing great, stock price through the roof, and he's buying shares. What do you think? Is that bullish or bearish? On the face of it, it's really bullish, isn't it? Because this company's gone up loads, he's all the information, he's buying shares, the shares he's got have already gone up loads in value, instead of selling them, he's buying more. And you, the retail investor, who hasn't engaged their brain yet, but is responding to the emotional headlines of buy, sell, thinks that this is really bullish. But let's look at it again from a capital gains tax perspective, right? Then let's say that the company loses value, and then he sells those shares that he bought at that higher value. What's happened? He's accrued a capital gains loss on those shares. Now let's say the stock price goes back down to where it was when he was given the shares. So his original shares, he's not made any capital gains on. But the shares he bought later, he's made a massive capital loss on. Okay? Then what's happened is he's taken the money from that stock market trend and put it into his back pocket to offset against his own future compensation in his own personal life. It's the opposite of bullish, and it's a really selfish thing to do if that was the only slice that you were to look at. And when people only come in and look at a small slice, they often get it completely the wrong way around, as that example demonstrates. And as the deep dive into the real truth that I've revealed behind John Sabino's thing also reveals. Ultimately, can we know for sure, guarantee anything at all about this process? No. We're on the outside. We can't. Can we avoid artificially putting a layer on top of something which has got an unnuanced view and hasn't fully considered all the topics? We can do that. And can we also then look for the positives and see that without necessarily introducing confirmation bias? Yes, we can. I'm looking at this objectively as I can, and I'm trying to find both the negative and the positive story. The negative story doesn't line up, right? He couldn't have done it as a discretionary sale, as his only choice. As a choice. He couldn't have made that choice. He didn't. He wasn't legally, because he didn't have the alternative. So it looks like a discretionary sale, but it was a sale, and it couldn't not be a discretionary sale. And there's only certain boxes that you can tick. And when you know the details and you kind of dive into it a bit more and you think about the alternative cases and how things could really pan out, and in that example of the CEO where it went back down to neutral, that's securing it for future. But if by the time he actually sells, and he sells all the shares, had it gone down half, then the other shares he bought are just acting as a hedge against the losses. And the offset of the loss is equal to the offset of the gain, then it's like having done nothing. So a CEO that does that is gambling on the future of the company, on the stock trend, because it might go up more and they'll net some extra profit now. But if it doesn't, then they've netted capital gains losses to offset against future salary compensation. And it's not bullish about the company, it's a gamble on the company because they've got, bullish about their own salary. And that is a distinction that people obviously conceive so easily as soon as they think and engage the brain. And that's the topic today, but I'm looking at objective, looking at more. And the things that I'd be talking about in today's show, if we've been talking about other topics, include things like the Google Marketplace listing. Is that good or bad for LivePerson? What does it limit them from and what does it open up? And can we see the effects of that? What am I looking forward to about it? Because there's so much to explore there. Another topic is there any mitigating factors about their customer sign up? Not a lot of new logos in there. Have we got any patterns we can see? have we seen any other companies go through anything similar that we can look to say, well, this is how it went for them, perhaps this is what's happening in this circumstances? Would we dive into that? It's another whole topic, a conversation. Another one is the upcoming, well, the markets are anticipating, but again, nothing can be guaranteed, rate cut in December. Is that going to be good for LivePerson or not? I mean, the casual observer will say no, all of their debt is at fixed interest rate levels. And then there's another conversation to be had about the effect that it has on their customers. And that's one that we could spend a whole half hour talking about. So these are the types of conversations. These are the types of conversations that I like to have because it involves engaging your brain and thinking through the topics properly. And as you can see, I apply that to everything I do. I've done that to the charts. I talked about the NVDA story, the whole markets, and I like to come up with pragmatic outcomes as well. These things inform my investment decisions, right? They involve technical analysis to actually make the best entry and exit prices that I can make on the individual trades that I take, and it informs every action that I do. So I hope that I've been able to take you along with me on this ride a little bit and you've enjoyed it. And if you have, you've been hitting the like button and so on. In the chat box, I can see that somebody's gifted a bunch of memberships out to people. That's absolutely fantastic. Seeing new names even in there, Slickboy Rick, for example, and stuff like that. I didn't necessarily see that with one before as a member, so that's awesome. And then we've got the fan funding, which is, you know, really done a good job at taking us towards getting that story today. Big shout out to the people who did that, because it wouldn't be right if I didn't. And we have a boogie and only shares. We've got a couple of questions here which I'll get to in just a second as well, so we're just wrapping up just a second. Got a couple of bits more to get through here because we have chat from the chat box. We had lots of good chat in from people: Sasan, XD, Lordy Cord, Kitties, and Executive User as well. We've also got chat coming in from Go In To Win, just saying thanks, you're welcome, mate. Disco Biscuits, love, late to the stream, happy Thanksgiving everybody. Everyone be well and spread some cheer. That's a good Thanksgiving message. 1,000 Years of Darkness jumped in here to say, miss contributing to the goal, buy yourself a cup of Joe. What a great guy around this Thanksgiving time of year. And with that,
What a super message, for a positive message and really clear explanations, and delivers a lot of clarity for you. Very complimentary too, reminding you you're part of the foundational base of the GameStop lore and where we've come from as a community, taking us right now up to the best, most educated community online with regards to insider buys and sells, and communicated in such an effective way. And that's something smart people look for. They look for their words to be properly understood so they can properly orientate their efforts, because people, smart people, really smart people, they like to push in a direction that works, and it's really good to know that they're on the right track. So this is an inspiring moment for the community. I think that we can now go on and do even better in our own communications and how we speak about not just LivePerson, but how we speak about our own trading and how we understand our own motivations, instead of constantly oscillating between fear and greed. But we can actually do an objective understanding, research, and properly investigate before we start saying stupid fanny last shit that gets everybody else scared because we ourselves can't properly make a trading decision.
And with that and the underlying message of love that goes out to everybody in the audience that supports what we do and is part of our journeys on Patreon and membership on YouTube, and who hits like to the video, massively appreciate it. And like John Sabino, Jamie and I like to try and make that go that extra inch or extra mile that we can. Hopefully we go a couple of miles more than Big JS in terms of delivering real value at any sacrifice to ourselves that it takes to actually get through this together and come out the other side as winners, and we're all in it together. See you all again next time. Thanks for tuning in.